This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. This is Bloomberg Businessweek Daily, and this is on a day as we await the Beige Book crossing the Bloomberg terminal. We know this is this anecdote, a compilation of Fed regional banks, but it gives us an idea of what businesses, individuals, what is the economic sentiment across the nation. We're going to wait for those heads to cross.
I was just going to say, we're going to wait and wait and wait, because sometimes that happens with the Beige Book. Sometimes it's actually, just go to the website and read the whole thing. Sometimes. I don't know.
We got a show to do.
We do have a show to do. That's true. That's true. Hey, also this hour, Carol mentioned the U.S. economic backdrop. We did get some data that showed the U.S. service economy expanding at the fastest pace since mid-2022. A price index hit an almost one-year low. That's driving an advance in stocks today, and maybe a little bit of reprieve from what we saw yesterday. Yeah,
exactly. The economic backdrop, though, it's a reminder. It does matter. So we're going to get into all of that. Hey, we're also going to get into the trade, the short, the longer-term views, and the Trump put. Is there one that's out there? I think there's a little bit of a debate among traders and what Wall Street strategists thinks. We're going to get into that with Alli McCartney. She's back with Alignment Partners over at UBS. And then we're going to talk a little bit more about what's going on in the Middle East.
Yeah, off-ramps, a move for the first time since World War II, the latest on the president's war with Iran.
And then, hey, for something that we like to talk a lot about, and that is what Apple is up to. They've got a rollout, so we're going to get the latest on that as well.
I might get that new laptop.
Oh, really?
Yeah.
Wow.
$600.
Wow, it's a bargain.
For an Apple.
I know.
All right.
All right.
Yeah,
all right.
We'll see.
We're going to talk Apple. Right now, though, let's talk the markets. Let's get a check on that trade, equities, treasuries, all of it as we wait for those Fed headlines in regards to the Beige Book. Here is Charlie Pellet.
Hi, thank you very much indeed. We got Apple shares right now down by about 0.2%, but the Dow, the S&P, NASDAQ, they are all pushing higher right now, with the S&P up 64. That is a gain there of just about 1%. The Dow Industrials up 270, higher by about 0.6%. NASDAQ up 360, NASDAQ up 1.6%. The NASDAQ 100 index up 1.8%. Equities are rebounding after data this morning showed that the U.S. service economy is expanding at the fastest pace since mid-2022, while a price index hit an almost one-year low. The VIX holding right around 20 now, the 10-year 4.07%. Big move for gold, up 0.9%, 51.36 the ounce. West Texas Intermediate crude up 0.3%, 74.77 a barrel. And Brent now trading unchanged. Brent, the global benchmark, at 81.40. Bitcoin is surging 8.3%. Bitcoin back at 73,674. So on a day when we do have oil little change right now, we've got oil shares declining. ExxonMobil among the oil majors down 1.6%. Chevron down 2%. ConocoPhillips down now by 3.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie there with the market rundown. Do want to point out we're not seeing a little bit of firming in the equity action coming off of the posting of the Fed Beige Book to the Federal Reserve's website. Having said that, quick check on treasuries. Charlie broke it down, but pretty much the same trade action, so not really too much reaction. We do want to get into it, though, and do a breakdown, because we also had some economic news this morning that did impact the trade on this Wednesday. Let's get to it with Molly Smith. She's Bloomberg News economics editor. She, like we, are poring over the Beige Book. Good to have you here in studio.
I'm on page 3.
Good for you. All right,
Thank
Mr.
you.
Speed
What
Reader.
a fast reader.
Yeah, a little show off.
Total show off.
What jumps out for you?
Honestly, it sounds like more of the same.
Yeah.
I know that's not very newsy, but that's what I'm reading, at least so far. But, Tim's faster than me, so maybe he's seen something different on page 5 by now.
Well, I go to page 2 and I go to prices, because I'm interested in what these districts are reporting when it comes to inflation. Prices increased moderately in recent weeks, with 8 districts reporting moderate price growth and 4 seeing slight or modest increases. Many districts reported that costs rose across several non-labor inputs, including insurance, utilities, and energy, metals, and other raw materials. an issue for inflation, or is that to be expected?
I mean, I think that the worrisome sign about that is that, remember, this all happened before the war in Iran started over the weekend. So those are really things that you might start to think about, particularly on the energy side, as far as what might be a risk for the inflation outlook here domestically. Should this be a more prolonged conflict? If we really start to see a sustained energy shock in oil and gas markets. Too soon to say that just yet. And of course, if this starts to impact other parts of the supply chain and logistics, we're just not seeing that yet. But so far, it seems like this is a fairly benign looking beige book. Also on the employment side, stable is what most districts seem to report. And that's exactly what the Fed wants to see. And that really jives with the characterization that Powell and others have been saying, that the labor market appears to be stabilizing. Got that a little bit with ADP this morning, and we'll try to see that with the jobs report on Friday as well, but there might be a little bit of noise with some other factors in that one.
Yeah, I thought it was interesting too. I mean, that they highlighted things about firms continuing to pass tariff-related cost increases through to their customers. Others began to do so after having absorbed previous increases. And we thought we would get to a point in the stage where companies were like, got to move it along, got to move it along. And the other thing I think is interesting is in terms of labor, we saw wages rising at a modest or moderate pace in most districts, firms competing for talent in select areas, including the skilled trade. So, it just, to me, Molly, reminds what I feel like a lot of guests come say, that we're not quite there on inflation, and it feels like the scales are tipped that it could go higher. That's even backing out the war in Iran.
Totally. And I feel like what we've seen in the last couple of producer price indexes, so this is the wholesale inflation level, they've been very firm. You're not seeing that as much on the consumer price side, but PPI tends to lead what consumer prices see. So it's really just a matter of time then, if firms are seeing these increased input costs, that you usually somewhere down the next couple of months, that usually does translate to consumer prices. Any
of this, and we're going to talk about this at the 3 o'clock with Steve Moore, a former economic advisor to President Trump. Fed Governor Stephen Miron said it's still appropriate to continue cutting rates.
Wait, he does?
Yeah.
What? Well, shocker.
I know.
Sorry.
But it does raise a question if anything that could happen, at least on a macro level, not just in the U.S., but outside of the U.S., with Iran, with prices as increasing because of shipping issues, because of, I don't know, what happens with energy, if that changes his view or changes anyone on the Fed view who is actually dovish right now.
I mean, I think we've known for a while Myron's an outlier here. Yeah. So we'll leave
his view. Hence why Carol was like, really?
Welcome to the show, Captain Obvious.
We'll put
Are you talking to me?
I kid.
We'll put his views over in one bucket. But for
tough.
Everybody else, definitely much more wary of the inflation risks to the mandate, which is why the stance to keep rates on hold right now really is the pervasive view, and that especially with what we've seen with the labor market recently, there do seem to be signs more validating that stabilization stance. This doesn't call for a job market that needs immediate rescue in any way.
I want to ask you about going to the overall economic activity, and they said activity increased at a slight to moderate pace in 7 of the 12 Federal Reserve districts, while the number of districts reporting flat or declining activity increased from 4 in the prior period to 5 in the current. And they said although consumer spending increased slightly in balance, 2 districts reported ongoing declines. Many noted that sales were dampened by economic uncertainty, increased price sensitivity, and lower income consumers pulling back on spending. And again, not a new narrative, but you do wonder if there's still this feeling of unease. And should we assume this is prior to what happened last weekend in terms of the invasion on Iraq? None of that is included in here.
Yeah, no, this is before the Iran war. So this is
Iran.
Right.
If I said
yes.
Iraq.
No. Yeah. We're. I
remember that one
behind us.
I remember that one too. Sorry, but go ahead.
That's all right. I mean, I think, there have been some economists lately who have raised some doubts about what we call this K-shaped economy.
Yeah.
So that idea that wealthier consumers are propelling all of spending right now and that lower income consumers are really falling behind. I think where their doubt stems from, not so much that the wealthy are continuing to spend, but just how much low income consumers are not spending as much. How much are they pulling back? Mm-hmm. And when you see, I mean, granted, all of this is anecdotal data. Mm-hmm. Like, we don't have any hard numbers in this report. This is just what Fed presidents and their districts observe as far as activity in their areas. That still speaks to, though, that this trend is very much still happening.
Yeah.
And you do see evidence in the hard data that would support the idea that lower income consumers are spending less.
All right, going to leave it there. Listen, thank you so much. We're on to, though, the jobs report. Just real quickly before I let you go, what are we anticipating on Friday?
It's going to be a tough read, I think. The payrolls number, there was significant strike activity in February, as well as winter weather that could make the payrolls figure a little messy. So we're looking at the unemployment rate to keep it clean.
All right, good stuff. As always, so good to have you back in studio. Molly Smith, she's Bloomberg News economics editor.
Hey, just to reiterate the Beige Book, the Fed said that most districts expect slight to moderate growth. Employment levels generally stable in recent weeks. Fed also noting that prices increased moderately in recent weeks. 7 districts, Carol, saw slight to moderate growth.
Yeah, I want to bring up the market boards. This is, in terms of what the tone has been on this Wednesday, we did have a report earlier this morning underscoring economic resilience. We just talked about it with Molly, and cooling inflationary pressures, which has given some support to the equity markets despite the geopolitical backdrop. So what does that mean? Let's bring up the numbers for you. S&P 500, we're pretty much hovering at our best levels of the session, a gain of about 65 points. That's good for a gain of just shy of 1 percentage point. Flip it on over to the NASDAQ 100. Those big tech names continuing to feel that index higher. It's up almost 450 points for a gain of about 1.8%. And then if you take a look at what's been going on in the Treasury trade, especially coming off of some easing inflationary pressures, or so it seemed on those economic reports. Tim, we've got a 10-year back off to about 407, shorter end of the yield curve 353.
Yeah, energy, the worst performing sector in the S&P 500. Not surprising given the run-up that we've seen. But if we look at global commodities, still WTI crude up 30% this year. Brent, Carol, up 34%.
All right, so let's get more. You've got the economic backdrop. You've got the Beige Book. Let's get a little bit more on today's trade. We welcome back Alli McCartney. She's here in studio, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. They've got just over $1 billion in assets under management back here. Good to have you here. How are you?
Thank you. It's been a week, but
It's
no
only
different
Wednesday.
than you are.
Alli, it's only Wednesday.
Oh yeah.
It's been a week. I want to bring up something that Goldman Sachs Group Chairman David Solomon said. He's been surprised kind of by the market reaction. And he does say it will take weeks to understand more about the situation. So I'm just curious, your take, coming off of the weekend news, what's your read?
So it is surprising, but I think as well, in a sense, this was telegraphed. You could tell in terms of the hedges that a lot of institutions had put on, that in a sense they were preparing, maybe not for full-blown war, maybe not for this level of altercation, but for some geopolitical tensions. Mm-hmm. I think what we are seeing, though, is that in general, geopolitical issues, unless they are prolonged, have a very muted effect on markets. They have a huge emotional effect on the individuals making those decisions, but they have a very short-lived and muted effect on markets. And when you are in a world like we are in, especially from the U.S.'s perspective as U.S. stockholders, which is largely what we're talking about, can something like this, in a largely energy-independent nation, by the way, derail...
Which is important,
which
if
is
you take us
very
back a couple
different.
of decades to
very different from China's perspective, very different from Europe's perspective right now, or even back then. But so can this, in the current form that it's in, or in what people are now just sort of prognosticating it could be, in best or worst case scenario, derail the sixth industrial revolution via AI, a double digits earning boom, a macro environment that seems to be all tailwinds, and the effects of the big, beautiful bill, both from a fiscal and a spending and consumer perspective this quarter? And the answer is probably no, that this is a buying opportunity.
If the war goes on for 3, 4, 5 weeks.
Yeah.
But if it's longer than that, like what would be the time period where you'd say, I need to reevaluate this?
So that's the right question, and I've seen it evaluated a lot of different ways. One of the ways that UBS did it that I thought was helpful to give some perspective is because, again, what are we looking at? We're looking at, the first derivative effect, which is oil, the cost of energy, and hence inflation, which gives the second derivative effect, which is where do interest rates go, et cetera. So they put together something that said, if this lasts 6 months, and if oil goes up and is sustained at 90 for a considerable point in time, And in addition, natural gas goes up about 30%. That's probably going to take about 60 basis points off consumer spending. If it's 6 months and then goes right back the way we think, which is we end the year at $67, that's a really protracted amount of time.
Are we crazy, though, to think that this only goes 5 weeks, given that there's not really a succession plan in place and we haven't heard? I don't think it's political for me to say there's not a clear message from the White House about what happens next.
Exactly.
So I think that's what happened yesterday.
And they seem to keep saying, we're going to do what we need to do.
So I
How
think
long
that's
it takes.
what happened yesterday when you saw the big downdraft in the morning. I think Monday you had a lot of technical action in terms of covering shorts, taking those hedges off. On Tuesday, I think the world was asking these much larger questions and going back to the Trump administration and like, is there a there there? Is there a strategy? So, but the question is, when you say if this continues, I think yes, we are probably naive to say that it's over in 100 hours or 120 hours.
Yeah.
But what does this continuing mean? Does it mean from a human and humane perspective? Does it mean from a Straits of Hormuz perspective? Does it mean in terms of really having had only 2 tankers go through there and a panic around energy? I think that gets abated by some of the things that they were talking about today.
Conversation at Bloomberg Invest before I think we got into an interview, and somebody brought up, and for those of us who remember 9/11 in New York City, is that if the U.S. has a track record of going into areas, removing a leader, or doing some things that on maybe the face value look like the right move, but then kind of leave, and then you kind of have an area in shambles. And I do think about what happens to Iran internally, which we've had the conversation. It's not easy to bring about change there. Have we created a bigger enemy that potentially somehow now has the U.S. in its sights in a big way? And what does that create?
So that's a little about why you've seen a lot of the volatility you've seen, why you've seen yields going up, as opposed to, in a sense, why you've seen this, like, I don't know if the word is weird or lovely, flight to safety in large cap U.S. stocks.
Yeah.
Right? But I think at the end of the day, if you look at the macroeconomic environment, and if you really are completely arbitrary in terms of putting out numbers and times and effects of all of these things, what you say is, what is this going to do to the largest economies in the world in terms of what people are spending and what the rates are? And although everything you say could absolutely be true, and although we've already been through a massive shifting and balance of power, and this could exaggerate that, I think the worst case scenario is, what does this do if the entire area of the Middle East is out of balance, out of whack, and doesn't have the capacity or the desire to produce and send oil to the quote unquote developed Western world? That's an issue. But from what we know and from where we think it is most likely the base case is to be going, it's probably maybe not 4 weeks, but not 6 months. The economic effects are manageable, and ultimately in the basis points, not the percents of what happens and changes to the Beige Book, changes to what the Fed's thinking. The things that are still the major tailwinds are the major tailwinds.
Yeah, it's kind of like your brain versus your heart or your emotions right now. Whenever you're here, I always want more, so come back soon. Alli McCartney, she's Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. Hey, one programming note, we mentioned David Solomon. He is going to be joining our team later on. That's at 5:45 p.m. Wall Street time on Bloomberg Radio and Bloomberg TV, so be sure to check that out. Coming up next, a NATO action, a first since World War II, an update on the war in Iran.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading at just about the best level of the day. The Dow, the S&P, NASDAQ all rebounding. This after data this morning showed the service economy expanded at the fastest pace since the middle of 2022. So the S&P right now up by 1%, back at 68.82. Dow Industrial is up 277. That is a gain of 0.6%. NASDAQ up 365. The NASDAQ Composite Index up 1.6%. The VIX just below 20 right now, just below 21 right now. We've got the 10-year 4.07% with the 2-year 3.53%. Gold is up $38 the ounce. Spot gold higher by 0.7%, 51.26 the ounce. West Texas Intermediate crude up 0.2%, 74.69 a barrel. Brent now trading lower. The global benchmark 81.34 the barrel, down by 0.1%. Big move for Bitcoin, up 8.5%. Bitcoin 73,784 on Bitcoin. CrowdStrike Holdings is projecting quarterly sales that were roughly in line with analyst estimates. CrowdStrike up now by 3.8%. Bath and Body Works out of Columbus, Ohio, they reported this morning. BBWI on the ticker up now by 3.2%. And coming up after the close of trading today, we will be hearing from Broadcom. Those shares up by 2.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, a bunch of headlines, of course, involving the Middle East throughout the day, throughout the morning. First of all, you've got the U.S. saying it would attack deeper into Iran, and the country's military capabilities are quote unquote evaporating as the Middle East war continues, Tim.
Also, NATO shot down a ballistic missile fired from Iran and headed toward Turkish airspace.
You've got a U.S. submarine sinking an Iranian warship in international waters. That coming from the Defense Secretary Pete Hegseth here in the U.S., marking the first time since World War II that an American sub had attacked a surface vessel.
Also, a report about a possible, quote, off-ramp for President Trump in his war in Iran. So this is the backdrop for a conversation that Bloomberg's David Gura had earlier today with former U.S. Secretary of State Antony Blinken on the U.S. war and attacks on Iran. This for the Big Take podcast.
Well, look, it's certainly something that should have been anticipated. And what's one of the striking features so far is that Iran has launched far more missiles and far more drones at the Arab countries in the Gulf and in the region than it has even at Israel, disproportionately so. And in part, that's because we have bases and a presence there, but they've gone beyond that. They've gone at infrastructure that these countries have, the oil infrastructure. They want to try to inflict so much pain that we can't sustain the effort. And that's something that should have been anticipated. And David, I think we're looking at a couple of things going forward in terms of where does this go and how does this end? And it seems to me that there are two critical factors to look at: markets and munitions. Markets. Where are the oil markets? Where's the stock market? Where's the bond market? I know President Trump is very attentive to those. And if they go in a southerly direction and stay that way, or in the case of oil, in a northerly direction, that's going to be possibly a limiting factor. Then munitions. There's really a race on to figure out who expends their munitions first and fastest. The Iranians put us in a position where we've used up a lot of interceptors to deal with defense, or even our offensive missiles to take out their launchers, or conversely, did they run out and we still have what we need? I don't know the numbers here. I'm not privy to that, but it is something we have to be very, very attentive to because these things are not in infinite supply. The production times are very long. And of course, we're also using in many cases, very expensive weapons to take down $20,000 drones. That's not a good equation if you keep that going over time. What I'm worried about, one of the things I'm worried about, and this gets to the second and third order consequences, is we so deplete our arsenal, and it takes a long time to rebuild it, that puts us in a disadvantageous position when it comes to, say, a China or a Russia. All of those things need to be factored in. And again, it's one of the reasons why if you're going to undertake something like this, you've got to make sure that you've factored all of that in. And again, it really should start with explaining to the American people why you're doing something, why it's necessary, why now.
Do you see an off-ramp anywhere at this point?
I do, in the sense that, one, as I said, I think the off-ramp will be governed by this question of munitions and markets. Mm-hmm. And then what is that off-ramp? I think the president may simply declare victory. He'll say, got rid of the Ayatollah. We diminished or degraded or destroyed their nuclear program. Again, we did the same thing to the missile program. We did the same thing to the Navy. And as to the regime, well, over to the Iranian people. Good luck to them. Hope they succeed. And if they don't, it's their fault. If they do, we'll take the credit. How Iran responds to that remains to be seen.
And that, of course, is former U.S. Secretary of State under President Biden. That is Antony Blinken with Bloomberg's David Gora, co-host of This Weekend on Bloomberg TV, Bloomberg Radio. You can catch that on Saturdays and Sundays starting at 7 a.m. Eastern. You can also catch the entire Blinken interview in full on today's Big Take podcast. Right now, though, we want to talk with a member of our own Bloomberg News team as well.
Yeah, for more geopolitics, let's bring in Nick Wadhams. He's Bloomberg News National Security Team Leader. He joins us from the Bloomberg News Washington, D.C. Bureau. I was struck at what the former Secretary of State said at the end there, the idea of the U.S. declaring victory just based on certain things that have happened right now, the idea of an off-ramp. That his comments coupled with what you're hearing from Washington, what we're seeing out of Iran, what we're hearing from the Pentagon, what does it look like the end of this war would look like, Nick?
Well, every signal we're getting from the Pentagon and the Trump administration is that they really are nowhere near an end, that they're saying it could take many more weeks. And in fact, the Pentagon briefing we got this morning was really a discussion about how their strategy is changing. So whereas they had targeted air defenses, coastal defenses, ballistic missile launchers, anything that would pose a threat to U.S. forces and allies in the region, they're now planning to move inland now that they say they've gained control of Iran's skies and want to launch more precision strikes. So hitting that issue that former Secretary Blinken talked about there on the munitions, that they don't necessarily need to intercept as much of the Iranian outgoing missiles because they've decimated a lot of that capacity, and they're now shifting to using other weapons, dumb bombs, GPS-guided munitions that they have in very large supply. So far, the administration is not signaling what the end would look like or giving any indication that we're getting anywhere near it. In fact, they're saying that they're only going to ramp up operations over the next several days.
Hey, Nick, I get it that military strategy and any kind of war activity, it evolves, I guess, as the situation evolves. But having said that, is there any really clear messaging? I want to go back to kind of the original question about why we are there, what we're trying to achieve. And, you know, is this really our war? Or if Israel hadn't seemed so keen on doing something, would we be talking about this right now and about U.S. involvement?
Right. So there's been a lot of reporting out there that the Israelis, Prime Minister Benjamin Netanyahu, pushed the U.S. into this war and was really an instigating factor. So that's one concern. You've even seen that concern expressed from some of President Trump's most loyal supporters in the MAGA wing of his party, and the administration has given sort of succeeding, sometimes contradictory explanations for why it's doing this, whether it's a desire for regime change. President Trump had indicated that. Then Hegseth said, you know, it's not about regime change, but the regime has changed. They've also talked about the need to eliminate the nuclear program, the ballistic missile program, drone strikes. So you have seen them sort of gradually refine and shift that message over the last several days.
Wait, Nick, I just want to jump in. I honestly, I thought the strikes last year depleted and dismantled Iran's nuclear system and nuclear weapons capabilities.
I mean, they had said that those President Trump, the word he used was obliterated. He said that it had obliterated Iran's nuclear program. But part of the messaging you've seen them give, including President Trump in the State of the Union, was that they were continuing to rebuild that nuclear program. And that then raises the big question about the end game. So all of these capacities that the U.S. is destroying and has been targeting over the last days and then since last year on ballistic missiles, the nuclear program, drones, Iran would theoretically have the ability to reconstitute those programs over time, which then leads you to think, okay, well, the only way to get them to stop doing that is by changing the regime. But that's now what the administration is saying they don't want to do, that they're not interested in regime change. So that's why we're still asking these questions about what does success actually look like here, because you can decimate those programs. Iran has shown the capacity and the willingness in the past to reconstitute them. So the administration is not so far saying, okay, here's the end point. Now, obviously, they don't want to say that in part because they don't want to tip off the Iranians, but you get the sense that they are intentionally leaving that open-ended so they don't get boxed in one way or the other.
Hey, you know, Nick, a lot has been made of this U.S. submarine sinking an Iranian warship in international waters. First time since World War II that an American sub had attacked a surface vessel. There's that going on. But, you know, I keep thinking about what does the U.S. and Israel have to achieve for the U.S. to be more secure? If this is about national security, and this is we know a country, Iran has hated America, or so we laugh. It's not funny, but, chanting about death to America for a long, long time. So what do we need to do to make it so that the U.S. is actually more secure against Iran? Which I think should be kind of the end game if that's what this is all about. I don't know.
Right, and there have been a lot of questions about the U.S. strategy, because there was a big question. Well, Iran did not have the capability of hitting the U.S. mainland with any ballistic missiles. So what was the imminent threat there? I think what you're seeing in the case of the Navy is one of the things that the administration wants to guard against is Iran's ability to basically choke off the flow of oil through the Straits of Hormuz. So they say, okay, we eliminate the Navy. That eliminates a major tool that Iran had to be able to threaten global shipping. So there was that issue, but the sort of second and third order consequences there of how that would impact the U.S. mainland, well, that's a bigger and sort of more open-ended question. Obviously, if Iran were able to clamp down on energy flows, that might impact oil prices at home. But of course, Iran was not going to clamp down on those flows if the United States had not attacked it. So there's also a bit of a chicken and egg situation there as well.
So is it, forgive me for putting you on the spot, but are we less secure or more secure, or TBD?
Well, so some of the president's critics have argued that the way that we would be less secure is by, if you weaken the leadership and create essentially a failed state in Iran, where does that lead? Does it lead to new terrorist threats, increased refugee flows, and things like that? Well, that's a big open-ended question and a huge unknown for the future. The president's argument is no, there was an imminent threat to U.S. bases. They say that Iran had essentially held the U.S. and Israel hostage. They said it had a conventional gun to the U.S. head over a long time, and that this was a threat that they needed to deal with now that Iran was reconstituting its nuclear program, which would have posed a threat to Israel. It was developing ballistic missiles that would eventually have the ability to hit more U.S. targets, and that it continued to harass and threaten U.S. allies through the funding of proxies in the region. So they say those threats were the imminent threats that essentially needed to be dealt with now that presidents over decades had refused to tackle, and that Trump now is the one who's finally dealing with the problem. And as they say, Iran had, it was a slogan, death to America. So that was a threat they wanted to deliver on one way or another. So, it really depends sort of on whose side you're on here.
All right, good stuff. Thank you so much for getting us up to speed. Nick Wadhams, Bloomberg News National Security Team Leader, joining us from our bureau in D.C. Coming up, we're going to switch gears.
Yeah, we're going to talk a little about the latest from Apple. That's next on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, and the NASDAQ 100 index all advancing. S&P right now just about the best level of the day, up 67. That is a gain of almost 1%. The S&P back at 68.83. Dow Industrials up 282 points now. The Dow up by 0.6%. NASDAQ up 1.6%. The NASDAQ 100 index up 1.8%. And small cap shares are advancing, with the Russell 2000 index up by 1.2%. The VIX at 20, the 10-year 4.07%, the 2-year 3.53%. Gold up 0.8%, 51.29 the ounce. We are seeing a retreat as of now for crude. West Texas Intermediate pulling back by 0.1%. WTI 74.47 a barrel. Brent, the global benchmark, at 81.18. That represents a drop right now of 0.3%. Crypto on the move big time. Bitcoin up 8.5%, 73,845 on Bitcoin. And we just got word that U.S. money fund assets surged to a record $8.27 trillion. That according to Crane data. Again, recapping here, stocks higher, S&P up 67, a gain of 1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Tim Stenovec, live here at Bloomberg headquarters in New York City. Want to talk a little bit about some new products from Apple that Tim is already thinking about buying.
You got to.
Rolling out the $599 MacBook Neo, biggest push for the company yet into low-end laptops. So it's really looking to go after Windows PCs and Chromebooks for budget-minded shoppers. You're budget-minded? I know about like a coffee thing that you bought that wasn't so budget.
Well, that's because I don't spend all my money on computers. I can buy expensive
I'm sorry.
coffee
Did I say that out loud
That's
to
fine.
everyone listening?
That was a gift.
Is Dad listening?
He is. He
it
is.
was a gift.
Yeah, that was a gift.
Aw, okay.
Bloomberg News consumer tech
Sorry.
reporter Samantha Kelly joins us here in the studio. $599, a price point for a Mac that I think is not familiar to anyone.
Yeah.
Because that's so inexpensive. It kind of puts it on par with Chromebooks and with some like lower end Windows PCs.
Yeah.
What can it do?
Yeah, so this is still very much a Mac computer. It looks like a MacBook. It's a little bit slimmer. The display is a little bit slimmer, but it's still light, fits in your bag. It does almost everything that you would expect from a higher end MacBook Air. However, the computing, the processor isn't quite there, but anything you would need, navigating the web, documents, some light editing, basically to your point, like a substitute alternative for a Chromebook or a lower end PC.
Are people going to go for it for consumers? Like, have we been looking for this?
Yeah, I think absolutely. I think like students, schools, kids are using Chromebooks, businesses, I think casual users. I mean, a MacBook Air starts at $1,100. This is $600 and you're getting
for, like popping on the plane, watching movies.
Yeah, and the colors are fun.
Well, will you be able to watch movies?
Oh, yeah.
Oh, okay.
But,
go ahead.
Absolutely.
But it also kind of is in the iPad's turf, which is interesting.
Yes. It's one of the reasons why Apple has delayed this for so long. And they actually announced a new iPad Air this week that is also the same price, $600. Oh. But, people, it's a different form factor. So, you could be on the couch, you could have, a keyboard connected, but not everybody wants that.
Yeah.
You could have a laptop experience for, half the price almost.
So why shouldn't someone get this? Like, why shouldn't I get this? And should I go for a $1,200 computer instead?
Yeah, I think it depends how you're going to use it. If you're like a heavy user, if you have, heavy, if you're a gamer, if you have like projects, if you're a professional, like an artist or something like that, you're not going to want. But if you're just going to, if you're taking notes in class or if you're going to bring a computer on the weekend, you want to check your work email, it's basically does everything you really need. And what's really interesting is it now is powered by an iPhone chip, which is one of the reasons why they were able to keep it lower. The same chip from an iPhone 16 Pro, which is not that old, is now powering this laptop. Just kind of goes to show the efficiency, how they're able to make such powerful chips now.
Yeah.
And now they can put it in new products.
Yeah, they can do it. And it comes in citrus, silver, indigo, and blush color options. Which one will you maybe purchase?
I don't know, but I'm looking at Apple stock. It's down 0.2%. And it's not, launched. You can't really look at Apple stock on a launch day. We always do that when there's a big launch day in September or something and a new iPhone is unveiled. Yeah. One thing we do, though, or one thing we don't do is really pay that much attention to this revenue line. When we're looking at company earnings. I mean, people care about services. Mm-hmm. They care about iPhone. And does that, it's surprising to me that we're talking about a new Mac when, investors care most about those much bigger categories.
Yeah. I mean, what's interesting, well, first of all, the Mac in general, the category was down over the holiday season. But I think this is also a bigger play to just get more people into the ecosystem. Yeah. You might have an iPhone.
It goes after a whole different market.
100%.
This is way cheaper than an iPhone.
Yeah. You might then you might finally get this, and then you're like, you know what? I should probably have an Apple Watch at this point. And it kind of opens the door to more.
It's a gateway drug.
Guilty. Because if you think about it, we have a home that's got the laptops, that has the iPads. Once you kind of lean into that Apple world and universe, you just kind of keep adding on. You just do, right?
Yeah.
I don't know, same thing?
Yeah, you still have the first Apple Watch, though. That's the difference between us.
It was a second. It was the second iteration. And
You've been wearing that lately.
I have yet to update. I've actually gone old school, on watches all of a sudden. And I don't know, but we'll think. But I do think about, there's got to be a point where Apple says, listen, we've got the Apple lovers, full disclosure, and we're pretty transparent about it.
Yeah.
But at some point, you've got to figure out how do you grow your market, right? And who you can go after.
Well, that's exactly it. So, and it's also, you might have an iPad, you might have an iPhone or something like that, but these MacBooks are expensive. So maybe you have it, maybe a partner has it, but do you really want your 14-year-old kid to have a high-end MacBook? No, but how about a yellow MacBook Neo? It's kind of that perfect little harmony in between.
Except they go to college. college and then they need to do like spreadsheets and stupid stuff.
Well, you could do that on this.
Oh, can you?
Yeah,
Okay.
yeah. I mean, it's very much a functional laptop.
Does it
for sure.
solve? I'm going to pull a Mark Gurman here. Does it solve Apple's AI problem?
It's interesting you say that. No, it certainly doesn't. It says in some ways that it will, some of the computing power behind it will be able to better handle AI in the future. I think I really do think it's going to attract more people. I think it's going to have some purchasing power, but no, there are lots of other AI problems that they're still working through for sure.
What does it mean? As we said, this gives Apple the ability to go after a different part of the marketplace and then maybe get people into the Apple universe. Having said that, what else are we anticipating comes at a cheaper price point?
Yeah, well, this week they announced, this is just one of several different products that they announced this week. So we also had the iPhone 17e, which is its budget line, also at a more affordable price as well. Does less, that you would want in like a Pro or even a traditional basic line. No, it's sort of like, and it competes more with other budget phones out there like Samsung. There's like A series, and so it's kind of just lowering or rather, it's just making the playing field. It's giving something for everybody in many ways. And so we've seen that in different categories, but we haven't seen that with the MacBook. And this iPhone is just another iteration. It looks just like the previous version, really.
I'm going back to the new laptop because it has a headphone jack.
Yeah.
Which iPhones haven't had for years.
Yeah, it's funny. They
That's
said
kinda
that.
weird.
Yeah, they said that this morning. Usually they have these flashy keynotes, and this was kind of very much a dial down. We were all standing. I don't think I've ever stood for an Apple keynote before. We were in this like tiny little room.
You did this in New York?
It was in New York. Yeah. It was here, and they had demos. We were able to try out the new products, and they showed the video, and you're looking at everyone's like, oh, the colors are very fun, and then they mentioned the headphone jack, and I was just like, oh, that's interesting. Just as they're moving, obviously toward wire, AirPods, it's different lineup there, but it is
Having lost
still there.
4 or
Here's
5.
Here's the thing about
my
Kate.
husband actually bought me a cord.
You were wearing them yesterday.
Yeah,
and
she has these AirPod cords. Yeah. They make
Bright
the AirPods.
orange.
They make the AirPods into wired headphones.
So basically, you put it around your neck, right?
Yeah.
You put them in.
Yeah.
So it's all the
do you wanna
convenience of AirPods
do you
with none of
wanna
the
know
convenience.
What's crazy is I was walking into the Bloomberg Invest event, and then all of a sudden I look, I'm like, shoot, I lost one.
Yeah.
And so luckily we just went back. It must have slipped out. I must not had it in tight enough. But I'm like,
that's funny.
I can't go home to my husband and say,
Yeah, right.
I lost again.
Again.
Because he's like, just get headphones. Like, just do it.
I do have Apple Care for AirPods though, and I think that covers.
But
Does
think
it
about
even
it
when you lose them?
I don't know.
No.
If you're a budget shopper, though, you might not have AirPods. You would need a headphone jack.
Good point.
Yeah.
Very good point.
What's old is new again
All right.
in technology
Cool.
sometimes.
Check this one out.
Great stuff. Samantha.
You get
Thank
with
you.
an education discount, you can get this laptop for $499.
Are you citrus
Yeah.
kind of guy?
$100
Indigo,
off.
blush,
I don't-
silver.
The price is right.
Come on.
It doesn't matter.
Lean into your blush
You can
side.
get a 6-pack of these for like the price of a
Yeah,
couple
you can be
computers.
bold with the color. It's
can
like
be
you
bold.
can just
Citrus.
It's okay. Yeah,
He's not going to do citrus.
summer, leading into the summer.
All right. When we come back, a look at the markets and stocks on the move. This is Bloomberg.